Most beginners in future trading lose money not because the market is against them, but because of these common mistakes. Let's talk about them so you don't fall into the same traps. My name is Re Crypto Mama. I talk about crypto tips that help you avoid costly mistakes. All right. So this video is also not a financial advice. It's for educational purpose only. Number one is over leveraging. Most beginners use a leverage high percent of leverage like up to 50x to 100x, and using that amount of leverage as a beginner is quite high. Even as an advanced crypto trader, future crypto trader is also high. So my advice is, if you're new to crypto, especially trying out future trading for the first time, or for you're just new in the system, I advise you use a lower leverage of 5x or 10x maximum. All right, till you get better, you can now decide to try out a higher leverage. All right, so number two is number two is lack of risk management. Most people that are new in future trading don't usually use stop loss, and stop loss is very vital for you because this helps you to target the market, know when you to leave and know when to stay. All right, but most people just dive in. And also, majority of you just have all your token in one coin, right? Like you have up to $2,000, and that $2,000 you're just holding Bitcoin, Wi-Fi coin, or token at all. You are just holding one token, and that is not advisable because anything could happen, and it means that you're losing majority of your money. Okay, so number three is um trading without signals, right? So majority of beginners in crypto trade out of emotion, random signals, and just signals and emotions and hype. All right, so when some of these things happen, you can see majority of them out of emotions or out of hype jump into the market, and when this happens, it made them lose their money in crypto. Because you have to be disciplined, understand what you want in the market, and also know when to enter and when to exit. If you don't have this in place and you're just following hype, FOMO, and co, you're definitely going to lose your money. So this is number three. Number three is lack of strategies. Okay, so let's dive into number four. So number four is chasing the market. All right, this is more like a FOMO or revenge trading. All right, so majority of new trader jump in when the market move has been, when it's already late. All right, probably when the hype, when Bitcoin has already pumped from $100 to $110, and there will be a cool off, right? So majority of you just jump in immediately the market, because immediately that happens, like this hype that usually happen, there is this hype all over the internet, all over the news. You can see people talking about the growth of Bitcoin, how it's pumped, how it gave some people some certain X. All right, but this is where majority of new beginners jump in. And if this happened to you, my advice is calm down. When your market is already up, that is not the right time to enter. This is probably one of the major risks, because that is the time it needs to cool off. You need to take a breath and cool off. And majority of the time, it even have a downtrend before going up again. All right. So if you enter, definitely you may likely you lose your money. All right. So this is it. Majority of you enter just trying to double or win at a late hour. So number five is confusing, not understanding how futures work. All right, majority of you are confused between spot trade and future trading. All right, you don't understand that there is what is called liquidation price, margin, price, and some other little fees that could eat up your money in future trading. Spot trading, yes, you can do, but there is not much charges. But there are some charges that could occur in future trading, that when you're done calculating some of these things, you'll see that your money, your current the price you used to enter sometimes may even go down. There are some charges that would have occurred. All right. So let's dive into number 6. So guys, this is the last one, which is number 6. Number 6 is, it's usually happen to everybody majority of the time, especially when you're not logic, when you are more of emotional person than logical person. All right. Number 6 is emotional trading. All right, majority of you want to get revenge, or you use out of emotion to enter the market, and this is when the market will likely deal with you. All right, so if you plan to enter the market when you're emotionally down, when your last entering was at loss, or you got liquidated, and this time around you are coming to make more profit or coming to revenge on the market, it will definitely do with you. All right, so number 6 is more like, be more of a logical person than emotional person. More like a man and a woman. All right, men are usually logical, so this in this area, or in this stage, this is when you have to be more strategically and more emotionally stable and strong, so that you don't revenge on the market, because definitely if you try revenge on the market will revenge on you. So guys, that is it for today. Now, my advice is that futures can be very risky. You need to learn risk management before chasing a profit. All right. So with avoiding most of this mistake will help you gain much in future trading. All right. So thank you so much for watching to the end. If you find this video helpful, do not forget to subscribe, like, comment, and share to get more people. And also, don't forget to follow me on Telegram to join my crypto signals, where I share more tips and crypto strategies. All right.